Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased technical analysis. And Uncle Charles did say yesterday, I was bullish, okay? Bulls were showing follow through and they showed a little bit more follow through today, okay? It's not because I predicted, it's because Uncle Charles is strictly follow the unbiased technical analysis that the chart shows us. So if that sounds good to you, please hit the like button and hit the subscribe button and turn on the notification, okay? So we're gonna get into the options flow to start off, and it's very bearish as usual. Filter for 500k premiums or above. The puts aren't as bad as yesterday, 70% into puts, 30% into calls. So still seeing millions of dollars worth of, you know, premiums going into puts still. Yeah, so that's, do what you will with that information, okay? Now here's my Discord. I try to create plans, trading strategies, give some commentary out, do my best to try to keep my members on the right side of the trade. It doesn't always work as far as, you know, trying to get people to listen to me, but I do my best and I take this very serious, okay? So as you can see here, I have a bull case scenario and a bear case scenario. Bear case scenario straightforward. Look for puts if 383.5 failed. That was the support, okay, when the market opened. Bull case scenario was look for calls if the 385.5 to 385.8 level or zone cleared, okay? I will look for calls if 385.5 to 385.8 clears. Wrote it right there, okay? And I also mentioned it in yesterday's YouTube video, okay? So did the plan work? It worked out very well. So the plan was look for calls above 385.8, all right? This is my white line right there, the zone. And I look for calls right there when it cleared. Took profits right at the next level, 387.5 to 388. Okay, that was my zone. All right, wrote it right here. Right here. I will look for calls targeting 387.5 to 388, then 389 to 390 zone. All right, it's all written right there before the move happened. And as you can see, it worked very well. I only traded one trade today. That's all I needed to make a good amount of money, and it went as high as 389.82. okay, very close, few cents off of the 390 level, but it definitely hit my zone. All targets were hit. If you followed Uncle Charles, should have made money today and with as little as stress as possible. But you know, it's like herding cats, and you guys know how cats are. Here's the daily chart. I'm still tracking this bull, this bearish pattern right here, which is a bear flag, okay? Even though we have been getting some upside lately, we still got this bear flag right here, and that's still technically a bearish pattern, okay? So we're gonna see if it gets filled out. I have my fib levels from the January high to the June low. The 23.6 retracement level is at 390, so we'll see if that clears tomorrow. If that level can clear, possible we go fill out the rest of this bear flag with the breakout level around 397, 398-ish. Okay? If we fail to break above 390, I have support at 387.5 to 388 zone, as mentioned right here. I will look for puts if I see a support fail, starting with that level, and if SPY can clear 390, I will look for calls. I'm gonna keep it that simple. Above 390, possibly we go fill the rest of this bear flag. If we still get rejection from 390 and we lose support level around 387.5 to 388, that's your cue to look for calls. We can go test lower levels around 385.5 to 386. If that fails, 383.5. If that fails, go back and test 380, which was my 38.2 retracement level from the March 2020 low to the January 2021 high. All right, definitely add that to your own chart, okay? And if 380 fails, we could possibly go test the support level of the bear flag. Breakdown levels around 377, below 377. Definitely start looking for puts. So remember, the plan is to look for puts when support fails, all right? Please write down the support levels. I'm going to say it one more time. 387.5 to 388 zone. Below that is 385.5 to 386. Below that is 383.5. Then 382. Then the very critical 380 level, which was my 38.2 retracement level. And if that fails, we go back and test the support of this bear flag. Watch for the breakdown of the bear flag. If it breaks down, I'm favoring new lows. The previous low was around 362-ish. All right. If we break down this bear flag, I'm favoring we go back and test 362-ish for a potential double bottom or an even lower low, possibly down to 350. That's where my 50% retracement level is, based on my fib levels from March 2020 low to January 2021 high. Okay, guys, so above 390, bullish. Below 390, be a little bit skeptical about being bullish, okay? Moving on to the VIX. VIX is testing the support of this triangle pattern, okay? So watch out for that. Below 26 is the breakdown. So it needs to stay above 26. Needs to clear 27.59. That's the resistant level. And if it can clear resistant, that is when I would turn bullish, because it bounced off this critical support and cleared a resistant. Okay, a bullish VIX is a bearish SPY. A bearish VIX is most likely a bullish SPY. Okay, QQQ followed through on yesterday's breakout. Breakout another critical level today, which is the 23.6 retracement level at 293.43. Massive win for the bulls today. It ran into the resistance level around 295.6. Okay, above that I have resistance level at 296.78. And if that can clear, we can possibly go test 299.4 for the gap fill. And above that, I would favor 303.5 to 304 zone. 306.5 and 308.5. Okay, I will turn bearish if QQQ drops back below 293.43, back below the 23.6 retracement level. That would equate to a false breakout. Okay, so as long as 293.43 holds, I'm bullish, and I will look for resistant clearing. Okay, I will switch back to bearish if 293.43 fails. Here is the Dow Jones, also cleared that critical level at 312.38. As long as it holds, I'm favoring more upside. Possibly go test 317.5, which is this multi-month downtrend line that you can see here, connecting April 21st to June 7th and June 8th high. Okay, so above 312.38, stay bullish with 317.5 as target. If that level failed, switch back to bearish, look for puts. IWM finally cleared that 174.35 level. That is now support. Upside targets are 178 and 180.7. As long as 174.3 holds, I favor more upside to those levels. I'll turn back to bearish if 174.35 fails, targeting 170, then 165.7-ish, okay? And last but not least, Apple had that crazy breakout yesterday, and it definitely showed follow through. I talked about the 143.5 resistance level. We tested it as a support and cleared it. All right, lingering around the 146 level. Okay, now I have the 38.2 retracement level here at 148. So I'm favoring we go test that level. I will switch back to bearish if 143.5 support fails. Okay, guys, so that's all I have for you guys today. I'm not using 15, 20 different fancy indicators. I'm just using the price action and the support levels, and I just follow my edge, which is my strategy. Calls when resistant clear, puts when a support fails. Very simple and straightforward, and it has worked well for me for many, many years. And I think it could work well for you if you guys take the time to learn it and pick my brain about it and actually practice it in real trading, or whether it's paper trading or live trading, up to you. I recommend paper trading first, of course. All right, so that's it. Thank you guys so much for watching. Peace.